Hey, good morning, traders. This is Blake Morrow with the FACE webinar, and I want to welcome you guys and gals this morning. Let me see if I've got the screen going. Okay, we got the euro dollar is up. You guys should be able to see what I'm seeing. We have on CNBC here momentarily U.S. Treasury Secretary Steven Mnuchin is speaking, so we're going to be kind of looking for some headlines from him as they come out. I've got one ear trying to listen into him. It's hard to actually listen in and do analysis at the same time, but we're going to do our best. Now I've got a really exciting announcement here in just a little bit that I'm going to tell you guys. I'm going to wait for a few more people to get here before I talk about it. So we're going to start off with the analysis, and we're going to start building the bias chart. I think most of you guys have remembered, or at least are getting comfortable with the idea of building our bias chart every single morning, which is good, which is important. But really quick, let's talk about the dollar. The dollar continues to weaken as the euro is extending its gains. I actually picked up the euro overnight at 116.80. I sold it this morning at like 117.05. Just obviously I sold it too early. It's still grinding higher, and I picked up the cable again at 128. 70 is where I got hit on my bid, and sold that this morning at 129.05. I think is where I sold it. So I scaled out of them a little early on both accounts, but that's all right. It's it's one of those things that I'm just kind of scalping, buying in and out. I still think that the dollar is going a lot lower, but it's trying to pick up the euro and pick up the pound on dips. Is the way I'm approaching this. By the way, Mnuchin is on TV right now, so let me see if he says anything. Stand by. There's the Treasury Secretary with him on. You gotta obviously be a little aware of any comments regarding the dollar. Okay. He's speaking about a possible deal with Canada and Mexico. And by the way, if you look at the dollar Canadian, we're dropping towards 129. This is going to be really key support. I do have a bid in the US dollar Canadian down here, so just want to let you guys know that I'm looking to pick up the dollar Canadian on a dip. I don't know if we're going to make it all the way down. You got to realize that we're coming into a pretty big trend line support. This is major multi-year trend line. Retest comes in at 129. And the figure basically, and we're coming into it, so we'll see if we can get all the way down there. Dollar's just getting smashed. Here's the dollar index, continuing to break down.
Blake Mnuchin just said that he expects a Canada deal within the week.
This week, yeah, he expects it to wrap up this week. Thank you.
Good morning.
Good morning. Yeah, I mean, and notice that the dollar Canadian's kind of limited right now as far as its upside. I mean, those are pretty positive comments, and the dollar Canadian's just kind of stalling now. Stand by. He says expects expects Congress to approve deal if Canada doesn't join. And I was reading a comment last night from the Globe and Mail. Is it the Globe and Mail out of Canada? They were talking about how a deal is really, really far off, but you know, you got a bunch of he said, she said, you know, type of comments coming in. So, question is, is Canada going to, you know, roll over and play ball, if you will, I guess. Dollar Canadian is still pretty weak here. Let's take a look at the Canadian. We're still near our lows. See if we hit 129.03, which is actually it's 127% extension. 129.03 of this this last consolidation. That looks like where we're going. So Minuchin says trade deal good for Mexican workers. U.S. dollar Mexican peso. You notice that yesterday we had limited downside. That when the deal was announced, we hit 1860 and then bounced. So Minuchin says U.S. needs better access to China market. So I guess that's all the comments we're going to get regarding Canada, at least this morning. Okay. Hoping they might say something else that will spur some volatility, but we will see. Sorry, this is kind of, I didn't know he was going to be speaking up until about an hour ago. So it was, this is kind of like a last minute thing, guys. You have to bear with me. I will start on the analysis in just a few minutes. I'm just making sure he doesn't say anything crazy. Here's the Canadian dollar, it's just kind of sitting there. And the dollar downside seems to have stalled just a bit. He's talking about currency transparency. I personally still think that a Canada NAFTA deal is still pretty far off, personally. But that's why I think that this dollar Canadian dip here to 129 and change should be bought. If you don't want to play the dollar Canadian to the long side, you can also play. You could also play the Euro Canadian. Might be another option. You know, I like the fact that we had a false breakdown here. You know, play something like this, and I'm not playing the Euro Canadian. I'm just kind of talking. Okay. So like a break above 152.60 should expose a rally here. Like I said, if you don't want to play the dollar, it's another option. Or even the pound Canadian. This hasn't extended itself all the way to make an ABCD correction. Doesn't mean it won't stop there. I'm just saying. Just speaking out loud right now. Okay. Minuchin says deal with Mexico as strong currency chapter. What does that mean? Strong currency chapter.
Yeah, I read that and I have no idea.
Huh. Yeah. You know, it's yeah, I don't think anybody knows what it means, frankly.
Yeah, Amir says it means blah, blah, blah. Yeah, you're right, Amir.
That's probably exactly what it means. Blah, 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 blah. At least I can say his last name, Mnuchin. Mnuchin. It's an interesting last name, isn't it, Stelios?
Yeah, I don't know.
Mnuchin says not looking to harm Chinese economy. Uh-huh. Yeah, sure. Okay. He's still talking. He's complimenting Lighthizer. Oh, he's asking about J-Pal. Wait, hold on. I got to hear if he has any comments regarding the Fed governor, because, you know, obviously Trump has been very critical of the Fed chair. So I'm going to see if he's going to be critical as well. Respects the independence of the Fed. I really think that this dollar Canadian, you got to be a buyer down here. I think they're really far off still. And like I said, if you don't want to play the dollar Canadian to the long side, which, you know, makes sense. I'm not necessarily keen on buying the dollar either. Playing a Canadian cross, you know, you can you know, maybe even sell the Canadian yen. That actually is probably a really good trade, because we just hit triangle resistance. There it is, right there. It's probably a really good short. Just saying. It would be easier to do if stocks weren't going straight the hell up. That's the other issue. Merchant says not concerned about yield curve. Let's take a look at the 10-year yield really quick. Sorry guys, he's still talking, so my analysis is paused until he is done. Yields are just sitting there. And by the way, I was reading a note in from Mark Chandler from Brown Brothers, and I 100% agree with him. The pain trade in the market right now would be treasuries going higher, would be treasuries breaking out to the upside. The 10-year, excuse me, like the 10-year rallying, and then yields dropping. That would be the pain trade. And I think that is a possibility. You have to watch if equities roll over. I think the bond market's going to go bid. Doesn't necessarily mean it's going to happen today. I'm just saying that I believe is the pain trade, since he was just referencing yields. So,
you know, Blake, what I don't understand is every single time in the past, you know, 2 or 3 decades that the yield curve is flattened or even gone negative, but inverted, but it's a different story. Every time it's flattened, every time it's an omen for a coming recession. And this time it's supposed to be different. You know, oh no, we don't worry about that.
So it was different.
It's always different. Yeah, yeah. You know, it's like when something, 9 times out of 10 has happened this way, you can't just say, I'm ignoring this and it's not going to happen. I don't get it, but I'm just a Greek guy.
The rhetoric, supposedly, good morning, by the way, Blake. Good morning.
Good morning.
Good morning to the rest. The rhetoric, supposedly, which makes some sense. I first of all, I agree 100% with you, Stelio. It's something to be concerned. And by the way, when Manuchin is being asked about the yield curve, and he says he's not worried about that, the next question I would ask him as a reporter is there anything in the economy that worries you? Because, if he has nothing to answer to, he's lying. Yeah, you know what I mean? It's like, isn't there anything in the Treasury Department that you worry about? Anything at all? But regardless, the rhetoric about the inversion of the yield, no, it's not inverted. The rhetoric about how flat the yield curve is that we never had so low rates. So perhaps having such a flat yield curve matters less in the sense that short-term rates are just at 2%, right? So the whole rhetoric behind it for those that advocate that, no, I don't worry about it, I mean, it doesn't mean much, is that. Although I don't agree with that, I'm just saying.
Yeah, I mean, I hear exactly what you're saying. That's like the blind optimism, I guess, is what it is right now. So, all right, well, you know what we're going to do? He's still speaking. He's still on CNBC. I don't think he's going to say anything they've hit all the key points that I was more worried about. More was on Canada, China, and yeah, he even talked about the yield curve, which I wasn't expecting. So well, let's get through these majors. Let's run through them. All right. So the euro dollar. This is just so you guys know, we're in a really bullish move. I am expecting more gains. For the near term, I'm expecting a move to 117.50, 60. This bull flag pattern that you see here, let me delete this blue line. We don't need that anymore because that was from yesterday. Okay, so this bull flag pattern extends to 117.60. If you guys didn't know, CityTech is short the euro dollar. They've been they're shoddy at best. They're I don't want to call them the Gartman of the FX market, but they do get it wrong quite a bit. They're more like 50-50, but they have great risk reward. So when they work out, they tend to make money, but they're not that accurate. They are short the euro dollar from last week at 116.25, I think, 116.25, and they're short with the stop at 117.50. Well, the bull flag actually extends us to 17.60. So my assumption is they're going to get stopped out first. Then the market's going to backtrack a little bit and work this inverted head and shoulder pattern, which eventually takes us to like 119 and change. 119, way the hell up here, 119.50. So does that mean that you just go out and buy the dollar right now or buy the euro right now and call it a day? You can. I think if you bought the euro and just closed your eyes for a couple of weeks, you might make money. But I think there's going to be a lot of different ways to make money on the way up. Like, for example, I bought the euro last night when it was at 80, and I sold it this morning. Made like 25 pips. I'll be doing that again. So, for example, for today, you have to realize the hourly charts are already a little extended here. We have this trend line resistance that looks like it can get tagged, and that comes up at 117.30. So what am I trying to tell you here? Well, I still think it's going higher. Okay. But it's gonna hit resistance along the way. I don't think this is a big counter trend move. I don't think it's going to be easy by any stretch of the means. Dips to 116.50 should be very well supported. I think we could say that the Greek gods would be singing. Some of you know what I'm talking about. You might be laughing if you just heard that. Would be singing if we got down here to 116.50. All right, that would be a great place to be on the long side, in my opinion, because what would happen here is you'd break through the support, you trip all these stops right here. You know, get all those long guys that are like the ones that are buying right now. Yeah, the ones that are buying right now, and they put their stops down here below these lows. They get stopped out. You turn around, you get long. They lose money. You get long at a good price, and then it bounces back up again. See how you play that?
You open the Pandora box. A lot of people asking for you to sing the Greek gods once again.
Yeah, I don't know if I'm going to do that. I'll do it by the end of the week. How about that? By the end of the week, you guys will get the Greek gods singing. I'm not sure if I'm up for it just yet. I gotta. Oh yeah, I got some work to do. But all right, here's the cable. So the cable. We broke a major downtrend line. I bought the pound last night on a dip at 128.70. 70 is where I bought it, and I sold it this morning at 29.05. I might have said I bought it at 80, but I bought it actually at 70 as it dipped back to this trend line. Picked it up, already sold it. I got out a little early. It's all right, you know. I think that major resistance right now is at 129.35. 129.35. We break above that. That's when things really turn bullish for the cable. I want to buy it on dips. I think it's bullish. Okay. Dips to 128.65. Should be well supported. Aussie dollar. So the Aussie broke out of its triangle to the upside, but you know, I really don't trust the Aussie. I don't think they're past any of their political woes. I think you can play the Aussie differently in different ways, but you know, as far as the Aussie US dollar goes, we're gonna have pretty good resistance at 73.80 up here. 73.80. I do think it's in a range. Okay, that means, you know, you buy dips, sell rips, buy dips, sell rips, and that's how you play a range, right? Support. 73.20 is support. 73 price. 73 is a better support to write down. You know. Let's go over to the Kiwi. 68.20 or 67.20, big resistance. 6720. It's big resistance. We are in a range. Okay. Support should be 66.70. So I'm just kind of moving through this as quick as possible because we had Mnuchin on. Support 29.03, which is 127% extension of this move. Pretty oversold now on an hourly, so 127 or 29.03. It's 127% extension, and the long-term trend line retest. Okay, resistance is at 129.80. Period. End of story. So this is. Let me grab this line here. This one's. Yeah, that one. That is resistance. 129.85. 1.2985. Is a range. You may think it's bearish, but I actually believe it's a range. It's in this down channel, you know, and we're testing really key support here. So, Swissy's bearish. Look at this thing break down. So one of the most lopsided trades right now in the FX market is the market is extremely short Swiss francs, and the market's getting crushed right now. 200-day moving average. We are at the 200-day moving average right now. So this is support. 97.50. Is it worth buying the Swissy right now? You know, I mean, you really could theoretically buy the Swissy, put in a 30 pip stop, and just hope for a bip, a bounce, you know, back to 98.20. Right here, 98, or I'm sorry, right here, 98.10. I'd rather just wait for it to get to 98.10 and then short it. But, you know, for those of you that are, you know, wanting to trade counter trend, you can try that. Problem is, if we go risk off, you know, we see some risk aversion. If we see a little bit of risk aversion, then you know, that might be more problematic for the market. So I think you just have to be a little careful trying to buy the dollar Swiss. This is a bearish breakdown, and the like I said, the market's pretty aggressively long Swiss franc, so short Swiss franc, excuse me. Dollar peso. So look, we hit channel support yesterday and bounced, so we should respect that, right? 1861. I mean, if you use ForexAnalytix, you knew that was happening. You hopefully should not have been short down there. So if you look at US dollar Mexican peso, yesterday, the US dollar Mexican peso is in a down channel, but the positive enough news could push us to trend lows at 1840. But we referenced the channel lows, so, or the channel. So hopefully you didn't get too aggressive while you're down there, because it was right at support. So 1861 is going to be support. Resistance right now, and look at this gap here. Resistance comes in at 1886. So 1861. 1886, and if we break 1886, we could see 1905 again. All right, we're in a range. US dollar Norwegian krona, we are really testing the neckline of a head and shoulder pattern, but it doesn't. I mean, this is really, it really is trying to be supported down here. I'm going to write down support as being 827. This is a hard trade right here, because you want to be short. You know, at least I would want to be short, but at the same time, it's grinding. It's not like really falling. And with the euro looking like it's might have peaked for the day, the euro might make another 20 pips higher. But you know, I think the euros, you can just buy the euro dips if you can get one. You know, that could put the US dollar Norwegian krona back up here at 834. So I'm just going to write that down. I think it's still range bound. Swedish krona. I think retail sales came out of Sweden last night, and it was pretty weak from what I have to go back and read my notes, but anyway.
That is correct. That's correct.
It was pretty weak, right? Yeah.
Yeah, it was negative, yeah.
All right. So, that's just kind of kept us range bound. So 903, 915. Not a whole lot to do right at this moment. Range. Let's see. Oh, do we have data coming out? We do, don't we? Goods trade balance coming out.
Yeah.
Okay. Whoops. Where did my Bloomberg go? There it is. All right, hold on. Goods trade balance, see if it affects the market at all. Here's the dollar yen. Wholesale inventories, retail inventories. Shouldn't be a market mover, guys, but you never know. You post any type of outsized number, whether it's good or bad, it has the potential to move the market. So, and since trade's been kind of the focus of the current administration,
so it's 4 billion worse than expected.
Worse than expected.
But still, like you said, a few billion here and there.
What's a few billion amongst friends?
Yeah.
Yeah, nothing. No reaction. Wholesale inventories rose. So if inventories go up, is that good or bad? Retail inventory has also gone up. Does it tell you the consumer is slowing down or inventories build and we don't have as much demand?
That's a good question, Blake, and I've actually seen a lot of people discuss it. I personally think inventory build is not a good thing. But,
me too. I mean,
it depends why inventory is building.
Theoretically speaking, it's a good thing because it means that they are assuming
they're preparing, basically.
Yeah, they're assuming that there will be an increase in demand, and that's why they're preparing, with building inventories. Theoretically speaking, I'm saying
got it.
Again.
Yeah. I hear what you're saying. I mean, well, it was both decent numbers, and the dollar is not doing anything. So I guess it doesn't really matter, does it? All right, let me finish up with the dollar yen. This is, hold on. Let me figure out what this is here. So we have a 50% retracement comes in right around where I was pointing, which is 110.67. We have 50% retracement at 110.60. Support right now is 110.95 for the dollar yen. 110.95, and resistance is 111.50. Now this is key resistance. We are in a range. You can see it's just kind of range bound. So we should have some support right through here. Obviously if this breaks lower, here, we could probably, make a break lower for some, make a little break lower, but overall, not doing much. Dollar index, last but not least, the dollar index, 161% extension of this move will take us to 94.45. That should be support for today. 94.45. It's 161% extension. We're in a bearish trend, and any rally now to 94.90 will be sold by me. Whoops, did I say that? I might have, but anyway. You get it. Okay, so there we go. We have a bias chart that is done. The dollar is still kind of weak sauce right now. Equities are really strong, huh, Steve? Huh, Stelios? Still really strong. I'm hoping for just a blow off top. Wouldn't that be nice?
Yeah, it would be. No, non-stop bid with low volume. Non-stop bid with with low volume. For the time being the end of summer as well, it might go on for a few more days. One thing that I noticed, Blake, I was showing yesterday that there are some potential longer-term formations for the vast majority, at least of the U.S. indices, that point to perhaps a big reversal. After we push somewhat higher from here. But one thing I notice is we do have some quite obvious VIX divergence, right? So, for example, we are pushing to new highs in all U.S. stock indices besides the Dow Jones, while at the same time VIX is at 12. It's quite a lot higher from the lows that we had before that blow off top in January, but it's also decently higher than what we saw, for example, in the beginning of August, that we reached levels very close to 10 again. So that's something I'm monitoring.
Yeah. I mean, the VIX is it is holding up. We are not at the levels that we even saw, in August. So, hey guys. So Steve, before I turn it over to you, I want to make an announcement for those of you guys that are listening in. We got some exciting news. We are adding a team member to the ForexAnalytix team, Paul Franco. Who I had worked with previously at the WiseTrade group. Since WiseTrade is winding down their operations, he's going to be joining us starting next Tuesday. So next Tuesday, Paul Franco, or SPZ Trader, as many of you know him, he will be joining us and as a part of our team and our analysis team in the morning. So congratulations to Paul Franco. We're all very excited to have him on board. Most of you guys know I brought him on a few years ago, probably like 4 or 5 years ago, onto the WiseTrade group as a morning analyst, and he would do the analysis before me. And guess what? He's going to be doing the same thing here on the FACE webinar. He's going to be joining us an hour before. So we're not going to be able to adjust the schedules for your email. So for those of you guys listening in, you're just going to have to use the same link, log in an hour earlier, starting on Tuesday, to listen to Paul Franco, and he's going to be doing the bias chart with you guys. So he's going to be filling out his bias chart starting next Tuesday. So you guys are going to get Paul, his analysis, then Coach Dale Pinkert will come on as he normally does. Every day at the same time. So he'll just Paulie will just pass it over to Dale. So we got some really exciting news. We're going to be bringing on Paul Franco to the ForexAnalytix team. So congratulations to Paul, and congratulations to you guys and gals, because he's going to be a wonderful addition. You guys know he's an extremely active trader. He's very, very active in our chat room, in our ForexAnalytix chat room that's for our subscribers. He's in there all day long right now, and he's going to be joining us full time starting next Tuesday. So welcome, Paul Franco, and welcome to the team. And we're all very excited to have him here. So you guys are going to get another hour of analysis starting on Tuesday. So one hour earlier than we normally start. You guys will get analysis. Now eventually, I'm going to let you guys know this, eventually that the morning analysis that we do will be for ForexAnalytix subscribers exclusively. The FACE webinar will always be a free, what you guys hear here, what you hear on here. And I'll still be here as well, but the hour before will be for ForexAnalytix subscribers. Okay, but you are going to be seeing a lot of Paul Franco as well. So get ready to start listening in next week. So next week, just use the same link that you're using now. It's going to be free for now until we have everything situated. So feel free to listen in to Paul. All right, great news, everybody. And also I want to thank our sponsors at Forest Park FX. If you guys haven't visited them, make sure you visit Forest Park FX. All the brokers that they can hook you up with are here. And if you ever have any questions, make sure that you email them or Skype them directly at the bottom of this reimbursement program page. So Forest Park FX are wonderful sponsors of the free FACE webinar. So make sure you support them, please. All right, guys, I'm going to pass it over to you, Steve. Good news, and Stelios, good news for our traders today.
Yeah, that's very exciting. Very exciting. Yeah.
Yeah.
So,
Paul is a great guy. He has a great view in the markets. He's mostly short-term focused, but he's for sure one of the best in what he does, and I think he's an amazing addition to the team. He's also going to be doing some intraday analysis for ForexAnalytix, and as you said, he's already active, and he's going to be even more active in our chat room. I think people will enjoy. He's also an experienced, broadcaster. He's an experienced host of, now his own show. What was your show? And I'm sure people are going to enjoy very much. The Morning Edge, yeah. And so people are going to enjoy very much, listening and seeing what Paul has to show them. And it's going to be a great lead into the ForexAnalytix, to the FACE webinar for sure. And, as you said, it's going to be an exclusive for ForexAnalytix members, a webinar only after a period of time. But we want people to, to first see what it is about. I'm sure they're going to appreciate it very much. Blake, there's one thing I wanted to show. I didn't want to interrupt you before when you were mentioning the USD Swiss, which, by the way, is currently, as you showed, testing very critical confluence of supports, because this is a very nice confluence of supports. It's the 200 daily moving average. It's this broken trend line support, resistance acting as support. It's also this horizontal support zone. But one thing that that possibly points to further losses is, and I don't know if you've recently had a look at it, is where the Euro Swiss is currently trading, and how it looks. So last time that I touched any of the drawings here was actually when we were in this pennant, and I was saying that I believe there is more weakness coming through. I mean, even the equality target, what you would call from a harmonics perspective an ABCD, comes down a lot lower. I mean, at 110.70. But look at this rebound that we had and where we currently are. So I think that the chances that the Euro Swiss is going to be rejected from here, for another leg lower, are decently high. I mean, this is obviously an interesting level. It has been an interesting level of support. So it might reject price action. If that happens, I think that USD Swiss is going to suffer even more.
Yeah, it's quite possible. It really is. I mean, the dollar Swiss looks extremely weak. Remember, this is a very lopsided trade. So,
yep, absolutely. I think same thing was with Euro Swiss. Yep. Everybody was long at 120. Everybody believed, that we're headed like I don't know where, and then we got that majestic reversal, and everybody was positioned completely opposite side.
Yeah. It's very, very possible. So, so we'll see. But guys, I'm gonna turn it over to you. I got to get hopping. You guys have a great one, and thanks everybody for tuning in. And congratulate Paulie when you see him, and he'll be here. Remember, next Tuesday. So, all right, guys, have a great one. Bye, Stelios. Bye, Steve.
Steve, a couple of things to say, if I can, before you
as
start.
Many as you want to say. We have all the time in the world. We don't have an interview. I'm going to go through all the questions, and you have all the time you need to. I'm sure you have some interesting things to say.
Okay, and just a couple of things. First of all, Mnuchin has kept talking, and he did say that he respects the independence of the Fed, and the Chairman Powell has been a phenomenal leader. So quite different to what Trump has said, but still, I'm sure he's trying to keep the balance. And he also said that he's perfectly content with a flat yield curve. Now, like you said before, if the yield curve was nicely sloping upwards, I'm sure he would have said that, this is great. It shows that we're going to have a nice...
it's those cliche answers. I mean, they always give... I mean, would anybody ever expect the head of the Treasury, unless it's 100% acknowledged by everybody that something horrible is happening, would you ever expect him to say something bad or to point to a potential bad outcome ever?
Yeah,
so
exactly.
what it is. If we had a more healthy looking yield curve, he would be saying, "Oh, look at this. I mean, it's exactly what you want it to be, right?" Now that it's not looking like that, it's like, nah, don't worry. We're not worried at all about it. I mean, even if it ends up inverting, even if it ends up inverting a little bit, but we're still not obviously, for example, in a recession, he's still going to be saying like, nah, listen, it has to do with short-term yields being too low, and we have no other signals that would make us worried, and we don't worry so much about it. You know how this. And if you remember, even about the recession of the Great Recession that we had in 2008, 2009, we actually found out that the economy was in a recession. What was it, like 6 months later, 7, 8 months later? I mean, we now know that even when the recession officially, after revising numbers and knowing the facts, that we had everybody that was in charge saying that nobody should be worried, and the recession had already started, right? So that tells you all you need to know. They are the last ones that are going to acknowledge.
And it's like growth forecasts of central. It's always hockey sticks going higher. It's never showing any kind of plateau or God forbid, a recession. But anyway, that's a different story. The other thing that I wanted to note was that we had Theresa May, the UK Prime Minister, who was on a trip to South Africa, if I'm not mistaken, and she actually said that a no-deal Brexit wouldn't be the end of the world. That is again a punchy statement. I mean, I personally think a no-deal Brexit would be a very bad thing, at least short term. At least for the first few years when things have to be set up and
First of all, literally speaking, she's 100% right. There is no chance the world will end if we get a Brexit. So if you think about it, I mean, at least she's 100% honest, right?
I personally think this is more talk of them saying to the EU, listen, we're prepared for everything, and we're not gonna, it's more poker stuff. It reminds me of the toing and froing between Trump and Mexico, where there was a lot of threats and we're gonna do this, we're gonna do that, and in the end, they're all coming to the table and they're talking about it. So. Just a little bit more of developments on the UK/EU side, more talk here and there, but really nothing major at the moment. We're still waiting.
Yep.
So those were the two little things that I noted overnight and were quite interesting.
Thank you, Stelio. Thank you. We have a few questions that I want to go over. And Stelio, let me know if I missed perhaps any of them. One of them is definitely, we have a lot of questions actually about the yen pairs. So let's have a look at some of the crosses and the yen pairs. Now having to do, let me first go very briefly, through metals, etc. Let me say here that gold, has obviously broken above the area that I was looking for. I actually now have a little bit of an exposure, 1/3 of an exposure long, because as I said, for me, 1206 was, all that mattered. We bridged through it. And I'm hoping for a pullback, so I can go to a full position. So I'm really hoping for a pullback here. I'm not sure if the market is going to give it to us, but I do think that the potential for more continuation higher is definitely there. Silver is also finally testing descending channel resistance. And by the way, crude has more or less stalled. As I said, $70 is what I'm focused on. As long as we remain below that, we can reverse lower, but if we breach above it, I think that the chances that we've seen the end of the corrective move lower, are increasing by a lot. Now, the other thing I wanted to show was copper, because copper is now finally testing previous support as resistance here at 272. I'm also monitoring this descending trend line. I do think that we might see a big recovery from copper even towards 294 if we actually bridge this confluence of resistances. But as long as we remain below that, there is always the potential of resuming to the downside. As I said though yesterday, and I said it when it happened as well, since we actually tagged the target of the double top, and that formation in essence got fulfilled. I mean, the target of that formation got fulfilled. I feel that copper is now more free from a technical perspective actually to rebound higher, but we're gonna know very soon. Right now, having to do with the yen pairs that we have questions about them. First of all, we specifically have a question about euro and pound yen, so let's go over them. So one, euro yen, very nice V-shaped recovery. I mean, I expected that we might have seen a rebound from here because it was one of my indicated support resistance zones. To be honest, I wouldn't have expected such a strong V-shaped recovery. Regardless, I said it yesterday as well, and that remains to be the case. I drew that a couple of days ago, 3 days ago, whenever it was. There is a good possibility that we're going to push all the way up to 131.50, 131.70. There's a nice resistance area here. And, you know, as long as that area holds, you know, there is always the potential for swing to the downside. But if we do see a break above that area, I'm going to start considering the possibility that this was a double bottom. And in that case, then we will have our work cut out for us. I mean, technically speaking, we will have a very specific target, the extension of this range actually, which is going to be pointing a lot higher. It's going to actually be pointing to new highs from there. So perhaps, you know, there is also the possibility that this perfect ABC lower, because this was a perfect ABC, was the end of the correction. And, you know, this was a deep corrective move lower to something that started higher here. But, you know, a lot of ifs here. As I said, let's see what 131, 50, 60, 70, you know, this area there does before we can discuss, you know, more options. I would still be looking lower, preferably, as long as we are below that area. The same thing applies, although I have, you know, even higher conviction about the bearish side. The same thing applies to pound yen. And pound yen actually shows a clear divergence to euro yen because the pound yen did push the new lows oppositely with euro yen. I think, and this is what I drew like a few days ago when we had a look at those pairs. I do think that pound yen, as long as it stays below 144.50, you know, there is a clear, I have a clear bias being, you know, being bearish. So I do think 144.50, it was a very strong area of support. It's going to be tough to crack when we test it as a resistance. So as long as we remain below it, and the closer we get to that, I think that the better the opportunity of actually looking, you know, to be short, because the risk-reward ratio, you know, improves the closer we get to that level. Now, let's have a look at some of the crosses here. So Eurozone, one of them. Eurozone, I talked about it actually when I was still on vacation. I remember talking about it this day here in the 22nd, because I said that, listen, you know, we are approaching this formation resistance. If we breach through that, I think that, you know, we are clearly then targeting at least a 161.8% extension of this range. So the next day we actually had that, you know, very, very bullish candle. We breached through that. Then we retraced a little bit lower. We retested this broken trend line of support. We're now pushing higher once again. So, you know, what I said back then remains to be the case. I see no reason why we shouldn't push to at least the 161.8% extension at 160.82. So that's what I think about the Euro-Aussie. The Euro-Kiwi, on the other hand, is still struggling with this confluence of resistances, right? Especially this trend line. Just look at this. Look at this trend line resistance. Look at how many times the market has tested it. Every single time it got rejected. I mean, it's 1, 2, 3, like 4, 5, 6, 7, 8. This is going to be like the 9th occasion so far, right? And, you know, since it's an ascending trend line, now we've also reached the area, this horizontal resistance area with the previous high and all. Also, it's a 127% extension of this move lower. So multiple resistances here. So, you know, I look at the RSI divergence as well here. So, you know, having to do with the Euro-Kiwi, you know, I can't advocate to anybody like buying it because it's on such a strong confluence of resistances that I would first need to see that, you know, cleanly break through before discussing upside targets. In any case, I think 177.50, 40.50 would be the next target here in case we finally manage to overcome that area of resistance. Now, I also remember pointing to pound Aussie saying that the move higher in pound Aussie can easily be corrective, and look at its nature like an ABC perhaps. It's also this is the second time that we retested this broken triangles support as resistance. So very clearly we tested it here, we tested it there. It's clearly previous triangle. You can see it here. So as long as we stay below that and just look at the candle we got a couple of days ago, I mean a very bearish candle, as long as we stay below there, I think there is a good potential for pushing lower towards the 171 area. So to be honest, on those it doesn't look all that healthy to me. To be honest, between all those pairs, only the euros looks quite bullish. The rest of them are either looking bearish or are like trapped, like the euro kiwi is trapped. And as you see here, the pound kiwi is trapped as well. I mean, the pound kiwi clearly within a symmetrical triangle. You can see it clearly here. There it is, clearly a big symmetrical triangle going on since whatever it is, November of 2017. So it's already been multiple months that we've been trapped in this symmetrical triangle. We're currently more or less near the middle of it, a little bit lower than that, but trapped roughly in the middle. So I don't know what to say. Nothing to do with pound kiwi, right? I mean, I would care to look for follow through if we finally break higher, which from the standpoint of going in the triangle from lower, the chances of breaking this triangle to the upside, theoretically speaking, are higher. But regardless, unless this triangle breaks in either direction, I don't know what to do with it. I mean, why do anything with it? Just even look at the RSI. Like RSI has spent the vast majority of the time recently stuck near 50, which it's another indication that there is no momentum in either direction, right? So why force something here? There's nothing to do here. Yeah, I was talking, Dave, about palladium the other day, and if you remember, perhaps you weren't on that webinar, I explicitly said that palladium is by far the most bullish-looking metal. The only reason I prefer to start buying some gold instead of palladium is the fact that after this V-shaped recovery, as you mentioned it, I don't have the risk-reward to actually establish a long here. I mean, where would I put my stop, right? So, if I saw a pullback in palladium and finding, let's say, nice support in this area, then I would be able to establish some kind of a position, knowing what I'm risking. But I agree with you. I think that the only thing that should trouble having to do with this can possibly be an ABC correction. It can also be something new to the downside, but it can just be an ABC correction. I mean, I was contemplating here with multiple scenarios having to do with Elliott wave interpretations, and one of them is definitely the obvious that this was a corrective move lower, which is now done. But the only thing that still troubles me from a simple basic technical analysis perspective is the fact that we broke below this ascending trend line support, which was like very critical for the trend for a very long period of time. So I'm skeptical as long as we remain below it. I mean, if I see a retest of this trend line, then another rejection, so like something like this happening that I've drawn here, then it will indicate that even if this is a corrective move, it's more complex. It's already at the very least this has been a double zigzag at the very least. But if I do see a break through this $1,000 zone, I will be very actively be looking for opportunities to buy the metal, right? So I agree with you. Palladium has had a V-shaped recovery, and it looks, much better than the rest of the metals. No, I didn't have a look at the USD CAD. Blake did, but I would be more than glad to give you my perspective. I think that USD CAD is currently testing a very important trend line support. You can see it here, right? Because it was trend line resistance. We broke above it. This looks like a corrective move to me still. And if we actually breach through this, I will then be looking for this confluence of supports at 128.50. Why? Because this is the 61.8 percent or 61.8 fib, if you want to say it like this, of the last move higher. It's also the 200 daily moving average, right? So I'm still looking for opportunities to be buying USD CAD, and from what I heard from Blake, he's of the same opinion, which is nice if our opinions confluence, because I trust his point of view very much. So I think that if you want to be doing something, is probably looking to buy at some point in the very, very near future than anything else. I will only change my mind if we've already had like three bearish days, counting today, consecutive bearish days, which seem to have decent size. I would turn bearish if we actually see a break below this area that I was talking about, the 61 point, the 128.50 area, with some acceleration. So if instead of seeing the pair stall somewhere there, I see it accelerating lower, then I'm going to start getting worried that something differently is happening. This is also another way to see how many things confluence in that 128.50 area, because if you see, the only thing I just did was draw the parallel of this trend line resistance. So in essence, this makes this a channel. And as you see, this channel support also passes from this confluence of supports at 128.50. So in my opinion, this area is quite important. We're testing now this broken trend line resistance and support. And if that actually fails, then it's all about this 128.50 level. So I'm going to be very, very, very carefully monitoring this. If I see some kind of a reaction from the market from there, I'll probably start buying. Let me see, with the Fed rate path and ECB forward guidance of one rate hike in 2019, with this type of disparity in rate differential, why is the euro appreciating against the dollar? First of all, yes, go ahead.
Sorry, I was just going to say, it's not the path of a pair does not depend on what's we take a snapshot and we see what's priced in now, and one is pricing 2 hikes, the other one is 1 or whatever. The question is, what's been happening in the last few days with the dollar, and what's priced into the Fed? Well, the Fed was pricing fully 2 hikes in this year and 2 hikes next year, and now we're pricing less. While on the euro side, we're pricing more or less the same. So in terms of differential, this has narrowed, and that's why the euro.
Exactly. The market is a discount mechanism. In essence, if the market already expected 100 rate hikes from the Fed, which of course would never happen, but I'm giving the utmost extreme, right? And it expected like rate cuts from the ECB, that would have been priced in and would have created a specific equilibrium between the two currencies. So now, if that assumption starts changing, doesn't matter if it still remains like that, let's say the Fed is
very one side. Yeah, it doesn't matter.
Yeah.
Sorry.
Yeah, exactly. I mean, we had priced in something specifically, and when that equilibrium starts changing, now if we start pricing in something differently, perhaps the market starts wondering if those number of hikes are going to be delivered. Or personally, as I've said, I'm extremely skeptical. If we do not go into a global recession or something, I'm very, very skeptical that we're just going to see one rate hike by the end of 2019 from the ECB. So let's assume that the global economy, including, of course, the one of the Eurozone and the one of the US, because if those fail, I mean, everything is going to fail with how interconnected everything is. So let's assume that they keep doing fine. Okay, fine. Anyhow, fine in quotes, but let's assume that they keep doing fine in what we define fine with current standards. Okay, I doubt that the ECB is only going to hike once by the end of 2019, and mark my word on that. So on the other hand,
I agree with that.
I think that there is, and on the other hand, I don't think that there is anybody that is wondering if, for example, the Fed is going to hike more than 4 times within the next year. And the main reason is because we've already seen Fed officials slowly pointing to the fact that the neutral rate, let's say the normal final rate that they would like to see, definitely doesn't surpass 3% by a lot. So we're currently at 2%. And when you know that the vast majority of the Fed officials cannot even fathom interest rates, let's say above 3.5% at the very maximum, why would you ever bet that you'll see a faster path to hiking rates, right, Stelio?
Yeah, absolutely. I agree 100%. It's exactly that.
So in my opinion, the risks are tilted that if we have a repricing of what's going to happen between the two central banks, it's going to be very hard that that's going to be towards seeing more rate hikes from the Fed in comparison to the ECB than what was priced in, especially when we were seeing the dollar trade at 97, right? The DXY trading at 97. So that's why I think we're seeing this jump in the Euro USD. And as I was saying several days ago when I was still on vacation, when we were like pushing towards the 116, I saw no reason why the Euro USD is not going to at least test the 118.50 area. And you know, I believe the same now. Of course, we're quite closer, so it's easy to say. But I saw no reason, especially considering the one-sided positioning and how extreme sentiment was against the euro, the cable, the precious metals, and for the dollar. I thought that when we finally saw a reversal and that the beginning of the moves we've been seeing, there would be more to it, simply because a lot of people would have to adjust positions, right? And that's those are the results of what I was just describing. Our pleasure, Jason. It's nice having conversations like that. Nick, I had a look at the WTI just like a few minutes ago, like 5-10 minutes ago. Bottom line, nothing has changed. There is a chance for more weakness as long as we remain below $70. But if we do breach $70, I think that's it. I mean, we can be more or less certain that the corrected move lower has been, is done. Now, there's another question about the euro pound, and I think we can wrap it after that because we've covered everything, and then we'll see you tomorrow. And it has to do with the euro pound. Listen, my opinion for a very long time was that nobody should be paying any attention to the euro pound as long as it was confined within this descending channel. Then we broke above it, we came down, we retested it. We've now even breached the 61.8 of the last move lower. So what can I say? I mean, it's bullish, right? That's what we were waiting for like 9 months, a breakout in either direction from this descending channel. We saw that, and you need to respect it. That's it. As simple as that. So the next target is the 78.6 at 91.60. So that's it. 91.60 might be printing quite soon. I think that you should be looking at this previous high roughly at 90.15 as a possible area of support if we pull back again. That's it. I think euro pound looks good. I would still not be buying it, to be honest. I prefer to do something different. I mean, I prefer to invest capital elsewhere. But if you have to do something with the euro pound, I mean, it's very clear in my opinion. Dave says Nasdaq futures looks like an ascending wedge on the daily. Yeah, Dave, we've talked about that multiple times. I was actually talking about that, since very, very early, like months ago, and that's what we drew. I remember we were having this discussion with Dale here on the webinar. We were somewhere, I would say we were somewhere here when I first envisioned this, or here, somewhere there, when I started envisioning this as a potential ascending wedge, and so far it has been playing out perfectly to this potential. Speaking of which, very nice confluence of resistance is being tested now because it's the 161.8% extension of this move lower and the 141.4 of this move lower. but I still think that perhaps the perfect push higher would be testing this area here, this area here, because especially if we test it in a few days from now, because then this is going to be the confluence of this big corrective move lower, the 161 point extension of this big corrective move lower, and at the same time, it's going to be the ascending wedges resistance. So I would love to see a continuation towards that level and like a big rejection. Then I'm going to definitely get involved with this market. Okay, Stelio, thank you very much for your commentary, and thank you all for being here.
Thank you, Steve. Thank you, Steve.
We'll see you again tomorrow.